Hi everyone, in today's video I'm going to talk about the Takung art company that through its subsidiaries operates an electronic online platform for artists, art dealers, art investors to offer and trade in valuable artwork primarily in China. So for information not considered investment advice. The market cap is over 338 million. The simple Wall Street finds on the risk. As you can see the snowflake analyze shows not so big snowflake. It has only the health, some of the checks, but none of the others. So the stock is pretty volatile based on the fundamentals, and as you can see, highly volatile. Share price has less than 1 year cash runway. Does not have meaningful revenue, which currently is 4 million, and earnings have declined by almost 60% per year over the past 5 years. As you can see, the latest news, auditor changed, and some of the CEO change earnings updates made the stock price pretty much up. I see like a lot of investors only dreaming about those returns. 1 year return 3,564%, hugely, and long-term price volatility considered low. And yeah, that's a huge amount. Industry 103%, market 80%. So yeah, this kind of earn returns, man, pretty impressive. Valuation 60 based on the PB, and unfortunately the simple Wall Street and tip ranks does not have data to calculate it or any price targets, but MarketWatch have an average of the stock price target $1. So currently it's 30.06. I'm not quite sure. It doesn't count the after hours volumes, but or pre-markets. But anyway, stock price target currently the MarketWatch shows average of $1. So there's, I think the drop is coming, and yeah, I consider investing to this as a highly risky project. So future growth, as you can see in the media sector where they work in, 18.6%. Past performance, as I said, decreased almost 60%. Companies unprofitable. Financial health side, the debt to equity ratio is 152%, which is considered high. And yeah, the equity is below the depth level, and which is not so good. So equity 5 million, debt 8, and they do have cash almost 5 million. Yeah, there's a lot of liabilities. They are not paying dividends. Insider volume, no volume. Ownership breakdown. So general public 53%, individuals insiders like almost a half and half with the general public, institutions 0.3%. Top shareholders, as you can see, there's individuals and some of the companies, institutions, Renaissance Technology, UBS Asset Management. Yeah, I saw Renaissance Technology in few other Chinese companies that have been in like Nasdaq or yeah, or the exchange Amex, founded 2012. Let's have a see the, yeah, as I said, like Finvish shows the price went pretty impressively up to 40 dollars per share. The volumes set pretty high, and yeah, I'm not quite sure, does it continue to keep the high volumes on, or I predict that there might be coming the down to somewhere $5 per share or something, but I think there would be kind of good opportunities to buy, but it's too risky, I think. I recommend like highest bid on a single stock, 1% from your portfolio. It's like it's forbidden, as I said. Simple safe dividends shows that shares outstanding pretty much the same level, 11 million, and total sales unfortunately decreased through the years since the 16, and yeah, last 12 months it's actually increased based on simple safe dividends comparing to 19. Investing.com summary the stock for long-term investors. As a buy, I would prefer like to, if you are in this stock, because those stocks are highly volatile, and yeah, there's a potential of course in every company where you're investing, but it's when you're in some of the stock. For example, I have a very highly volatile share that I'm down. I was last week down 30%. Now currently it's like 90%. So I think this highly volatile share price might surprise with those downs and volatiles. If you're investing some of these stocks, for example, from the S&P 500 map, you probably avoid the high volatility. As you can see, for example, like 1 week performance. So there's a correction going on in S&P 500 and other stocks as well. So yeah, as we can see, the technology sector is pretty much red. Fortinet down 7%. Microsoft, Apple, Google, Amazon, Tesla. Yeah, they're pretty much red, and also the Mastercard financial sector as well. But banks, I think, like, yeah, I think there's a correction going on, and as you can see, the technology, from the technology, financial, communication, consumer, the moving is to the, like, some of their, like, healthcare, industrial, yeah, United Health, as you can see, plus 2.69%, and it's currently $365 per share. This is actually very good, like, company with the dividends, and they're selling healthcare insurance, so it's the biggest in the United States. This is actually the good stock to buy, and yeah, it grew up very nicely. And let's pick it up here. For example, if we would analyze it, yeah, there's an upside trend, and in long term, the investors always wins in those kind of bits, because yeah, if you are, what I mean by investing long term and regularly, you can diversify by time. So if you brought here, for example, 310, then it drops down to somewhere 290. You brought this. Your next buy is here. It grew up to somewhere near to the first buy, 310, somewhere here. You brought it here. It goes a little bit down. It goes up. You brought it here to 320, and all the time it pays quarterly dividends. I think the dividend payment is 1.37% actually currently. If you would buy here, it would be around. It's less than 2%. It's most probably 1.7 or something, and that's only 1 year line. So I'm not sure if we can. Yeah, monthly. So here you can see from 2011 the dynamic. If you would buy somewhere here around here, you probably, the dividend on the cost is around if you're like above 50, 100, or for example, like now 4 years ago, we were probably 4%, and they actually are adding every year about 10%. So if we can see here, I'm not sure if we target price, so yeah, target price 400. So when we reach, or this company share price reached the 400 price target, the dividend percentage decreased to 1.2 or something like that, and those who would borrow the stock at this current price or last year's price, they could be profiting these differences. And yeah, I know someone had I think he started investing 2 years ago. It has 2.2%. Anyway, by long-term investing, you will be profitable a lot. And yeah, if you buy some of the volatile share price, which can go like rally, for example, like this, and yeah, you brought the stock. Actually, they are penny stocks, so $3 per share you brought on top, then it goes down, it depresses you, and yeah, the things are not going good, and yeah, some, like a lot of people sell when they are down like 50% or so, and then when they're selling, the share price going up, and it usually goes above the price where you brought it, and those who profit, those are patient people, and I recommend to invest only long term because it lowers the risks. Thanks for watching this video, subscribe to the channel, like the video, and see you in the future one.